Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Jim, thanks for having me back, and thanks to everyone tuning in.
Ted, the seasonal tax loss selling season is upon us. Does it give us some new opportunities?
I think so. In fact, I think, there's a case to be made that we may be entering sort of one of the generational potential buying opportunities here, tax loss selling buying opportunities in the oil patch. And what do I mean by that? Well, we've had a nice rally in the oil stocks in the past month or two, but they're still down significantly year to date. And so that's probably going to encourage some investors to take their tax losses here towards the end of the year. That could put, some pressure on energy stocks again. I mean, they've had a nice run, so there's probably some built-in bias for some profit taking in any event. So we could get a dip here. And if the theory that the supply and demand fundamentals are looking better for oil in 2021 as we open up the economies more, and I noticed overnight that Japan is putting together a plan to welcome the world for the Olympics in 2021, and you don't need to have a vaccine, but you will have to have a test. Based off the story that I read. So it was only one source, but so if the world can continue to sort of open up again, you will have more demand for oil, and that could help oil and gas stocks. Now, why do I say a generational opportunity? Well, I think we also have to be realistic that we are moving towards a greener type of energy sector. Whether one likes that or not, depending, there's mixed views on the green energy and climate change. I get that, but let's just deal with the realities here on kind of where the trend is going. And the trend, I think, is towards more greener energy, more electric cars. Even, when Linamar, a Canadian parts company, put out its quarterly results for Q3, it provides a market update, and it sees a growing share of electric vehicles, hybrid vehicles in the production space, going out to 2024. So, the consensus view is that we are getting to a more greener type of energy sector. So what does that mean? And why do I say a generational tax loss selling opportunity? Because this may be sort of one of the last big kicks at the can of the hydrocarbon based part of the sector to really ramp up here, because you've had a lot of supply growth reduced during the pandemic, and with the shale bust in the U.S., you've had capital spending cut back. So you could see, and I'm not predicting this, but you could see a nice run for crude oil next year. We'll have to see how far it goes. I'd be surprised if we got back to $100 oil, but look, we're in the age of still the printing press and zero interest rates, so anything is possible. So, let's take a look at what happens to these oil and gas stocks here in tax loss selling. because, if they get oversold, it may provide an opportunity for a nice bounce in 2021. The bounce, a type of bounce which you may not see again. This may, if the Biden administration gets going on its clean energy agenda, and that's not a guarantee they'll be able to get anywhere given the shape of the Congress, but let's just take opportunities as they come along, and if we see another round of selling here in the oil patch, it could present a nice tax loss selling opportunity. And we're keeping our eye on these opportunities, Jim. I actually wrote up a uranium stock in our Inc. chat. If you're a Canadian Insider Club member or an Inc. subscriber, you're eligible for an invite to Inc. chat. There are opportunities that we're keeping our eye on. We're going to be focusing on them this month in our reports, but they won't all make it into our reports. And the more I see, the more I'll talk about in our Inc. chat forums. But keep an eye on our Inc. reports for anything that pops up. We've already mentioned one or two already in the last week or two in the oil patch, but we're certainly keeping our eye on for more.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Ted Dixon. Ted, politics and gold miners. What's the story there?
Well, we're into a very interesting dynamic in the United States following the election. As I'm sure everyone knows, that the U.S. president has been working hard to try and overturn the results. The process isn't quite done yet, but let's assume that he's not successful at it. We still have the uncertainty of what's happening in the U.S. Senate, because it's very close right now in terms of the Democrats versus the Republicans, in terms of who's going to control it. And it looks like Mitch McConnell, who is the Republican Senate leader, will maintain control of the Senate. It looks like he will be the majority leader in the new year. That could change if the Democrats win both Senate races in Georgia on January 5th. There's a runoff. That is unlikely. Nothing is impossible. It is unlikely, I think. But let's assume that the Republicans at least win one of those seats, then Senate seats, then Mitch McConnell stays in charge. Now, why is that important for gold? Why, who cares, right? Who cares about this political stuff? Well, I think it matters a lot. And it matters a lot because the Senate will have a major influence on how much spending and stimulus gets done and how much of the Biden agenda is allowed to go through. And to cut a very long story short, I think the more that Joe Biden spends and the more his agenda gets pushed through, the more positive it is in general for precious metals and the gold price, because it'd be more pro-inflationary. Now, I know there's a theory that it doesn't matter what happens, that it's all positive for gold. And, I think in the long term, given the structural deficits, yes, there is truth to that. But I'm talking about over the next few months, right? The next sort of 3-6 months. So if you have a GOP Senate that stops a lot of stimulus and basically decides that they're already going to start looking to undermine the Biden administration to make headway in the midterm elections, which is 2022, you could have a narrative starts to develop that, the U.S. economy, is lacking stimulus, maybe we're not going to get any inflation, maybe the Fed's going to miss its targets, and all of a sudden this sort of bullish reflation narrative takes a turn, for the worse. Now, I'm not predicting that, and I'll get into a second why I think that's not the base case, but it is a risk. And to monitor whether we're getting that risk or not, I always keep a look on my eye on the gold-silver ratio. If it breaks above 80, that means gold's becoming more valuable compared to silver, and that would be deflationary in my view, and that would support the notion that the GOP are kind of clogging up the system with a tilt towards kind of stalling inflation and growth. Now, if the gold-silver ratio breaks down below 70, then I think, it's reflecting a more reflationary dynamic. Now, what could trip up this sort of the Republicans, if they wanted to stop things, what could halt that, or what could make it not impossible, but harder for Mitch McConnell to thwart Joe Biden's agenda? Well, the fact of the matter is, there are some relatively, what I would call, liberal Republicans in the Senate right now, and the senator from Maine, Susan Collins, who won re-election, she wasn't supposed to. She's known as more of a liberal Republican, and Lisa Murkowski from Alaska, who is not in Donald Trump's good books, is also known to be a bit of a liberal senator on the GOP side. So they could actually help Joe Biden, some more moderate parts of his policy go through the Senate, and I think the market would probably be happy with that. So I think the base case right now is that the market is hoping for sort of a moderate outcome, moderate spending outcome from the Biden administration, going through the Congress. And I mean moderate, I mean moderately big, as opposed to, moderate as in a balanced budget. Like, we're not having a balanced budget. I'll be shocked if the U.S. has a balanced budget in my lifetime again. But, in terms of ambition, a moderately ambitious, plan, with maybe $1 trillion more in COVID spending, and then an increase in base case spending to boost the green economy agenda. That would all be inflation positive, and that would help the inflation story and help silver probably better than gold. So we're keeping an eye on that, and we're keeping an eye on the gold-silver ratio to see if it breaks down, which would be silver positive and inflation positive, or if it moves back up, which in that case is a bit more concerning for all asset classes, not just precious metals miners. And in our gold report that we published at the beginning of the week, end of November, we do get into sort of what type of gold miners benefit from those different scenarios, because not all gold miners are created equally. Some will benefit under inflation more than others, and some will benefit from deflation more than others. So we're in interesting times. Let's keep our eye on U.S. politics. I think it really does matter for the precious metal space and the precious metals miners in the weeks ahead.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. The U.S. stock markets are coming off their best November in 30 years. What's the story there?
Well, I think it is an amazing story of asset price inflation, but the Canadian story has also been quite impressive. The Canadian Insider Index, which tracks mid-cap Canadian stocks, is now in positive territory year to date. And, boy, 6 months ago, I would have thought that would have been very difficult. But what's happening is our G economy scenario of government-led inflation is winning. And in fact, we saw some inflation break-even yields, and that's basically the implied forward-looking inflation rates generated from the bond market. We're hitting 52-week highs this week. So that's right in line with our G economy. That is government-led inflation, government spending, government checks, the Fed keeping interest rates low, helping to monetize the debt. That's all government interference, yes, but it's inflationary friendly interference, if you want to call it that, or pro-inflation, as opposed to the D economy, which is governments kind of tightening their belts and just favoring QE and nothing else, and just giving all the money to the financial elites on Wall Street and letting them kind of play around with it. But we've seen a broader printing press and globally through handouts and government checks. And that's a framework we talked about back in March. And will it be D or G? And we at the time we said if it's going to be G, it's going to be good for inflation oriented stocks like those that are tracked in the Canadian Insider Index. And since inflation expectations bottomed in late March, we've had a huge run in the Canadian Insider Index. And again, though, we'll have to keep our eye on what's happening in Washington. If we get gridlock and Joe Biden isn't able to get anything done, then that's not going to be so positive. So a lot will depend on Washington and whether they can keep the momentum going. And I think if they keep the momentum going, it'll put the pressure on Europe to keep them, their printing presses and government stimulus going. And so we'll be kind of off to the races, in 2021. So it's shaping up to be the base case a very good year, I think, in 2021 for the outlook for the Canadian market. And in the U.S. market, we're looking at, I think, a sea change in favoring value type stocks that can adjust to higher interest rates and lower bond prices. For the past decade, we've got that sort of second or whatever, third phase of the multi-decade bond bull market. Well, that looks like it's running out of steam, and we may have actually hit the bottom here in the COVID-19 period for yields. So, and that means that this great bond market run in government bonds that we've had, where you've just you've been able to have a balanced portfolio, and when the stock market goes down, your bonds go up, and you're able to reallocate. That game may be done. So maybe there'll be another kick at the can if Washington hits gridlock and there's no more additional spending. New spending that could throw a monkey wrench into it. So that's the big risk here, I think. Of course, we have some geopolitical risks too, but I think, in terms of the most likely monkey wrench, to be thrown at things, it's the Mitch McConnell monkey wrench, and we will have to keep an eye on whether he plays ball with the Biden administration and helps him get things through, or whether a couple of the GOP senators run around him anyways. And help Biden get some of his measures through. And I only say that because in terms of the implications on asset prices, this has nothing to do with, what I'd like to see politically. I don't have any skin in the U.S. Political game, but I do have a lot at stake in terms of how the moves in Washington will impact asset prices, and I think we all do. So whether you're into mining, whether you're into looking at dividend stocks and balanced portfolios, it will all matter. This is we're going through a major turning point here in potentially U.S. politics. We have to see if Joe Biden ends up being a president who can get things done, or does he pull things off like Bill Clinton did, or does he end up being like Jimmy Carter, right? Who, kind of never, unfortunately, at least the way the history books are sort of treating him, was able really to get a lot done, right? That may not be a fair characterization, but I think that's, generally kind of what how the Carter administration is viewed, and if we end up in that kind of a scenario with Joe Biden, then that's probably not going to be great for our asset prices at all. But let's see. Initially, we see some positive signs coming out from the Senate. We've already got a group of senators trying to promote a stimulus package that will go until the end of March. So that's a positive development. So the base case, I think, is still that we're going to get some new spending out of Washington, a tilt to the greener economy, and that's opening up a lot of opportunities here in the Canadian market, maybe broad opportunities for companies in the energy, mining, and not just gold mining, but also battery metals-oriented mining that we haven't seen in a long time. So, yeah, it's shaping up to be a promising 2021, I think. Let's keep our fingers crossed that we don't have any COVID-19 or other types of setbacks along the way here.
Can you tell us a little bit about the Inc. Gold and Precious Metals Top 20 report?
Well, we did something a little different this time. We included a lot of the industrial metal miners in it, and just for one reason, to show the tilt that our rankings have right now to industrial mining and battery metals mining. And they actually dominate the gold miners to some extent. Maybe that's not a completely fair characterization, but certainly there are a lot of copper, zinc, and those type of industrial miners that show up on the list. Usually we don't include those miners in our top gold report. But I wanted to show our readers this time, okay, let's see what happens when we include all the different mining stocks. What happens to the gold stocks, and the gold stocks are there. I mean, we've got some good names in there, but we have a very good cross section of miners in that list when you open it up to the industrial and specialty miners. So it's I think this points to the breadth of opportunity that we're seeing, and I don't mean by that all boats are going to be lifted here, but I think that you've got different spaces to look at for opportunity in mining, and so even if the gold price kind of treads water for the next few months, which it could do, I mean, our indicators are now suggesting that we're close to a bottom in the gold mining area in gold stocks. I was hoping to come on this interview and say we've got the signal, but we don't yet. I was just looking at it this morning, and it's still tenuous whether we've got a bottom here in the gold stocks. We may have. I mean, our signals are not infallible, but we just haven't got the confirmation that we've seen a near-term bottom. Let's hope we do. But there are other opportunities that we're seeing develop as well. So it's an exciting time. I haven't been this upbeat about the Canadian market for a long time. Let's put it that way. And we've had many false dawns, but I think that there's enough breadth. One of the benefits I think we've had is a competition between the two exchanges, the Venture Exchange and the Canadian Securities Exchange for new listings. Yes, I know there's always in these venture markets, these junior markets, there's always problems with companies that end up being scams. But that just goes with the territory. But in general, we've got a breadth, healthcare, mining, technology. I think that clean energy technology I'm more interested in right now than software, because software I think is vulnerable to higher interest rates. But we've got a good cross section in the Canadian market right now. So all we need is for Washington, Jim, to stay on track, and it should be for active investors, those who pick stocks, as opposed to those who just put their money into the S&P 500 ETFs. It could be a good year.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service. His website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.